to try to explain a little bit of GameStop and what's going on in the world. And I will tell you by way of explanation, I think Chuck wrote Gene sometime on Friday afternoon. Gene forwarded it to me. And I said, there's absolutely no way I'm going to do a GameStop thing and wade into this. But when you've got a topic that both AOC and Ted Cruz can agree on, well, I guess we got to just wade into it. So let's try it out. But before we get too far, I got a little bit of a quiz for everybody. What does a bubble look like? I guess that is not the answer. It's actually Microsoft, and here's why it's an important point. Is it a bubble when you go back to 2001? Right, so I caught you on the data part, but bubbles are what we're here to talk about in some part today. So here's another one. This is a bubble. Again, I took away your dates. It's a 1 year chart on Tesla. It's up almost 600% in that 1 year. And actually, as a quick side note on Tesla, if you look at the value of that stock, for every car that Ford sells, their stock is worth about $5,000 roughly. For every car that Tesla sells, their stock is worth about $1.6 million. So it gives you a sense of whether or not this is a bubble. And I am not providing stock advice, nor should you go and invest on anything I may say here today. But this is an aggressive chart regardless. All right, here's another bubble. Any guesses as to what this one is? Just for one little last tidbit, here's one for you. Anybody know what this bubble is here? This one's actually my fun one. It's the Arizona COVID cases. So absolutely nothing to do with the market, but I just wanted to see if you guys knew what a bubble looked like. Arizona is what a bubble looks like. So let's go ahead and let's meet the players in this drama that has unfolded over the last couple of weeks. First up, obviously, GameStop. We're only going to talk about GameStop and not AMC, but you can apply most of what we're going to say about AMC to GameStop as well. The first one is you might not actually know what GameStop is. There's a reason why. You probably aren't in the business of taking your Xbox games and selling them for pennies on the dollar and maybe buying another used game or buying a new game. That is what GameStop does. It is a brick and mortar location. They've struggled, as most brick and mortar has. They are in the process of closing all of their mall locations, but their entire business model is hoping that you're going to get bored of your game. Your parents don't just give you way too much money and you're going to decide that you need to take a game in for cash. That's what they do. But more importantly, as it goes for this drama that we are going to talk about today, there's a lot of millennial nostalgia around GameStop. Millennials love GameStop. They remember it from their childhood. They focus on it. It's a little bit of just a kind of a harken back to an era where maybe brick and mortar was good. And for those of us that are probably Alex and maybe Mike and a couple of others, this is like the Columbia House of our generation, right? There's like, you have this memory of it and you're like, hair bands in the 80s. You don't know why people still listen to it, but you remember, you just can't help yourself. So that's the first player. The second player is Robinhood. And just to give me a sense of how long I need to go on this, who here's actually heard of Robinhood? Not the story, but the app. All right. So the story on Robinhood goes with King John. He steals from the rich and he gives to the poor, and that's how Robinhood works. The app, on the other hand, is a little bit different. It actually steals your data and gives it to the rich. So not exactly the same model. I love their name because they're trying to play on that heartstring. But Robinhood is the first company to go to free trading. Right? They were the ones that said, we're not going to charge you any commission on any trade. They're in many ways the company that pushed Schwab and pushed Fidelity and pushed others to go to a no-cost trading system. Now, here's the thing that's the number one rule on technology. You've all heard it. If you haven't heard it, you need to try to remember this. If you don't know what you're paying for, you are the product, right? So if you're getting something for free, there's a reason for that, because turns out nobody works for free. Like literally nobody works for free. So you are getting something, and in this case, what they're doing is they're taking your trade data. So when you go into the app and you say, here's what I want to buy or what I want to sell, they're taking that data and they're selling it to institutional investors, right? So that is how they're making money. They're not doing it for free. They are making money. But a couple of points on Robinhood that are important. In 2016, they were only 1 million users. Last year, they were over 13 million users. And last week, they had more people in one day trading on their platform than Schwab, Fidelity, TD, and eMoney combined, right? That's how many people were trading on Robinhood last week. And then the last thing, and I think this is a really important point as we get to what the changes that might come in the industry are on as it applies to Robinhood. You can go from having, well, assuming you operate a phone better than my mom does, you can go from downloading an app, signing up for a name, and having money come out of your bank account and be trading within 10 minutes, right? So Robinhood, if you say, I want to put $1,000 in, take it out of my bank account, before they even take the money out of your account, they don't even know the money is in there. They loan you $1,000 and you are trading immediately. Right, and that is a lot of the action that we saw last week. People who were literally signing up saying, I can trade and I can be out before the money even comes out of my bank account. All right, so last player in this, this is Reddit. If you don't know what Reddit is, the best description I can give to you is it is that college, that college cork board in the quad where the piece of paper was written up and said, I need a roommate. And somebody says, you forgot to write your number. And then they say, what's your address? And that's really all I can do, because it is just a board where everybody gets together. And in this case, you can look in this right kind of mid-right section. They have 8.3 million people just on Wall Street bets. Right. And that is probably the word you've heard is Wall Street bets. I think it's of note that they call themselves self-applied name as the degenerates. So they obviously think of themselves as trying to change the world. And there's 8.3 million of them currently trying to figure out how to do that. So we've now met, let me just make sure I got that one. So we've met the players. Let's talk about what happened last week. First is short selling, and here's the basics. And I'll give you a second to read the cartoon. This is the most frequent question I've been getting, which is, how do I sell short? So the important part of this cartoon, other than a short explanation that says, I borrow a share, I sell it immediately, I hope it goes down, is this very last one, which is what happens if the price increases? And it says, then you have a problem. That is what you would refer to as a short squeeze, right? And that is going to be an important thing as we get into it in just a second, because short squeezes are what happened here. GameStop, if for every 100 shares that GameStop had outstanding, they had 114 shares bet against them. 114. They had more people that thought they were going to fail than they thought were going to be successful, right? That is a lot of short pressure. Right? Your typical short pressure on a stock is under 5%. So to have a stock that's got 114%, you have a lot of short pressure on a stock, and you started to say, why, right? And here's kind of the first explanation on who GameStop was and why you might have seen it. In the year 2000, they had a massive full revenue year of $5.5 million. Actually, when I saw this slide, I had to ask my coworker that was helping me on this. I said, was this 5.5 billion? And she said, no, that's not a typo. So huge rise. up through the next decade and a half or so, a little bit of a dip in 2017. And now we see a really significant dip as retail in general and the ability to get out and take your old games started to impact GameStop. They're off almost 30% in revenue from what they were 2 years before. So people selling them short, not a huge surprise, right? They're not executing the way they should be executing. And institutional investors came in and said, yes, here's the chance that we can do this. Well, going back to that Reddit board, to the Wall Street Beats, they thought that the institutional investors were wrong. They said, no, it's bad, but it's not that bad. It's not as bad as you guys think it is. Here's a chance for us to actually improve it a little bit and make a little bit of money. So they jump in. And as we look at this, if you go back, and this chart only goes to November, but if you go all the way back to all of 2020, from January through September, they're really trading in a range of $4 to $6, right? Not a big range. But then things started to get interesting. So we start seeing a gradual rise, getting up to about $20 in September through about January. And as you came into January, they're still only at $20 as a stock. But now we're really getting interesting. January 14th, the stock's at $40. By the 26th, on that day alone, it goes from $76 to $147. And now we have a problem because the short squeeze is on, right? These hedge funds that were trying to bet against it, in theory, have unlimited liability, right? They have borrowed money to bet against a stock that is now going straight up. So they now have to figure out, there's only 100 shares to buy and we have 114 against it. Who's going to be the last one standing? And now you've got real money, not Reddit money. You've got real money to the tune of $8 billion or more that is now going into that stock, taking it from that 147 level 3 days later to $483, right? And that's not driven by those retail investors. That the retail investors got the engine going just enough that actually at the end of the day, the hedge funds ended up doing it to themselves. They ended up having to close out their positions. And at this point, as of this morning, there's less than 50% short positions against against GameStop. So we've gone over the last 30 days from 114% to under 50%. So obviously a lot of money has come out of the market against them. So that's kind of what I will say is the facts of the case. That's how we got to where we are. So then we got a little bit of how did this happen and what's happening with Robinhood and what's the controversy and why are people upset about that? So Robinhood, for sure, they say Schwab did and maybe some others, but we know for a fact Robinhood stopped trading on a number of high volume securities. And you know, they stopped trading as this thing was running up. And they caused an uproar. They're now in a class action suit. It's only been a week and they're already in a class action suit. So the lawyers got on this right away, and not to be upset. And as I alluded to before, the lawyers, you know, the politicians don't like being wound up by the lawyers. So the politicians then got together, and AOC and Cruz decided that they knew better, and everybody was against Robinhood. Robinhood then says, well, actually, we just didn't have any money to continue our business model. We couldn't continue to sell. They've gone out and raised $3 billion in the last 5 days. Right, so from Friday till yesterday, they raised $3 billion because they couldn't continue doing it. It will be interesting to see what actually the regulators say at the end of this. Did they really stop it? Or did they really not have the capital requirements to continue to operate the business model they had? And if they didn't, what's going to happen to Robinhood and how are they going to force that business model to change? So that part will be one of those takeaways that you say, how did that happen? Why did that happen? And was Robinhood really being, were they intending to hurt the retail investor, or did they really not know how to deal with all of this action and activity? If I had to guess, and this is truly just a guess, I believe it's going to come more on the side of Robinhood needed the money than Robinhood wanting to piss off their retail investors that are their bread and butter, right? Going back to the comment earlier, if you don't know what the product is, it's you. They don't want their product going out the door because they didn't let them trade, right? They need that trading data. They need that information. That's how they are successful. So it'll be interesting to see where that comes, ultimately in hindsight, where that comes down. So why does it matter? The winners and the losers. So Melvin Capital, which is a hedge fund and probably the most famous hedge fund in this story, lost 53%, $8 billion in January, right? This is a company, Melvin Capital, a little bit of background on them. They have 7 clients. That's all they have, and they can lose $8 billion. These guys, I felt really bad for them. Don't worry. Steve Cohen and a couple of others came in and gave them an extra $2.5 billion over the weekend to make sure they were going to be okay. So everything will be fine for them, except they did lose a ton of money. And one of the arguments I wanted to make on this, and we can't prove it, unfortunately, but one of the arguments I wanted to make on this from winners and losers was, actually, a lot of these clients, if you look at Melvin Capital, and actually many of the hedge funds, their clients are also everyday retail people, right? Not directly, but indirectly. Many of the hedge funds are investing money for Oregon PERS or for California STRS or CalPERS. So you've got public employees, you got public teachers, you've got people whose everyday retirement is probably not much different than the people that are putting money in on the Reddit site that have now lost that money. So there is real tangible losses that are coming, and it's not just the hedge funds. The other one, and I think probably almost importantly, is I think at the final evaluation, you're going to find that many of these retail investors also lost a lot of money, right? For every person you saw in the Wall Street Journal or whatever people you read over the weekend that made 33 million or made $50 million, there's going to be hundreds that lost 3,000 or lost 5,000 or lot because they didn't get in at the beginning. They got in as this rise came up, and then as it dropped down, they either got out or they stayed in it. Either way, the drop has happened. We're now, one of the conversations we had internally this morning is, can you call the time of death on the GameStop trade? It was sometime around 7:15 this morning. So the GameStop trade is officially TOD at this point, and a lot of people are going to have lost money because of it. And then also interestingly, so we know the hedge funds lost. We know that retail investors are going to have some winners, but mostly losers. And then the one that we don't know the answer to yet is actually what's going to happen to Robinhood, right? Is it going to be a winner or loser? As I alluded to before, they did get $3 billion over the weekend, so they've got the capital to continue. But will they have the investors that want to continue to invest in and with them, knowing that this is the second time in 6 months that they've been shut down? And then second to last slide here. So the changing face of retail, I think this is also another, why does it matter? You've got speculative investors, right? If you were going in on GameStop last week, you are, for all intents and purposes, actually more speculative than the guy down at the local bar betting on sports, right? Because the guy on sports actually knows there's a chance that maybe possibly one day in a major 6 bowl game, Notre Dame will win, right? One day, maybe they will win, and he knows that, right? The guy that's betting on GameStop has no clue what the revenue is at GameStop, has no clue how many stores there are out there, has no clue what he or she is betting on, right? There's literally less data for the majority of these people than the average sports bettor. And that's a problem because that is major speculative. You are not buying a mutual fund. You are buying somebody's guess as to what might happen. And then activist investors. Activist investors in our industry, when you talk to somebody like Michelle or I, and you say, hey, what's the story with the activist investors? These are usually huge massive companies that are investing to elicit change, right? That's not what this activism was. This activism was a bunch of people that thought that GameStop was getting their feelings hurt. I mean, this was like the snowflake move of all time, right? Like, it's not okay for you to beat up on GameStop, and they came to their defense. They were activists over a feeling about a company, and not because there was any actual data behind it or trying to make a change. And one of the points that I got, that's really probably more of a summary point, but it is, what actually does this matter to GameStop? Did it make any difference to GameStop at any point? Is it going to change their business model? Is it going to help them do things better? Is it going to save them? Are they now going to open up all of the GameStops? I could probably ask any of you where the GameStop is in Medford, because there is one. And I doubt that many of you can even tell me where that is. But you can all tell me, yes, okay, I've got 2 votes, and I'm going to go with Junior knows as well because it's right by his office. So I'm up to 3 votes so far on where the GameStop is in Medford. So it made no big difference to them as a company. It's not going to help them at all, but we do have this sense of activist investors now coming in. And then retail platforms, we've talked about ad nauseum at this point about Robinhood. And then what does it mean for hedge funds? That's probably not as interesting to this group as it is to wonks like me, who think more about the hedge funds who have to publish their short data. Are they going to be able to do it? Are they going to now, for what we like to call as a pump and dump, are they going to be able to go onto these boards and start telling people to actually, manipulate the retail investor? And what kind of regulation is going to come from that? In the retail side, that is all going to be really interesting. And then the last one, the last slide on this is regulation and what the regulation looks like. I don't know that it will matter to most of us ultimately. I think what things that I would expect that would change, I think at some point they're not going to allow Robinhood to, or any of those companies to actually buy stock without having funded the account. I think that provides a little bit of a breaker. If it takes you 2 days to ACH or a day to ACH the money into your account, that's probably not the end of the world, right? You probably don't have to buy stock on margin from day one. So it wouldn't surprise me to see that as a regulation coming up, potentially trading limitations. And I will just offer up, I think the only thing that could come of this that will matter to you ultimately, and this is my moonshot of an idea, so I don't know that I want the recording on for this, is I think ultimately Bernie Sanders gets his way and we see a financial services transaction tax of like a half a penny or a penny per share trade, because it solves 2 of the problems that have happened over the last 2 weeks. One, it makes it so that people on Robinhood are no longer trading for free. Right? Like if there's 0 transaction cost, it makes it much more likely that you're going to hop in, you're going to hop out, you're going to really be that day trader. And then 2, it actually makes it less profitable for Robinhood to sell your data to these high frequency traders, because those high frequency traders have to pay every time they buy and sell that information. So it's no longer as profitable to them. And it actually is kind of one of those simplistic one of those simplistic things that without getting too deep into politics, you would hope the government could say, hey, here's a solution, and it's almost a free market solution. I think what we'll see ultimately is a bunch of regulation instead. But I would have loved to have said, if this is a problem that they want to solve, if it is, that the Bernie Sanders proposal for a transaction tax, financial services transaction tax, ends up being the solution that they might settle on. So with that, I am at the end of my prepared remarks, and I am